We think that the ride hail opportunity is an 11 to $12 trillion opportunity, and Tesla's data advantage is really huge there.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're going to be reacting to Ark Invest's thoughts on Tesla's stunning Q2 2021, some of the potential hurdles the company's facing and how they're navigating them, and most important of all, looking at some new thoughts and research from Ark Invest suggesting the robo-taxi opportunity is worth a stunning $12 trillion. Yeah, you know the whole Tesla is in the lead for full self-driving, that thing that they're winning at? Yeah, that, 12 trillion with a T dollars. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Now let's talk about the potential weak spots. Tesla saying the chip shortage is still problematic. How much of a challenge do you think that is going to be for Tesla in particular? How much uncertainty is that injecting into your models?
I'm glad you asked that, Emily, because I think one of the other really interesting things of the report is they said that they're working on 19 new variants of controllers. I actually think that Tesla, compared to other automakers, is really set up well to deal with this shortage because of the talent that they have in-house. Both the software and the hardware teams that they have allow them to actually explore those new opportunities, write new firmware and actually make decisions quickly to adopt a new strategy when you have a chip shortage. So again, I think, yes, while they are affected by it, like every other automaker, I think that they're better set up than most to handle it.
Tasha absolutely nailing it there. Every other automaker, using the term relatively loosely there, just crying in the corner due to the chip shortage. Oh, we can't get the chips we wanted, we may as well just stop making vehicles. Meanwhile, Tesla, due to their agility and their determination, scrambling, sourcing new chips, and then almost overnight writing new firmware for 19 different chips to keep vehicles rolling off production lines and going to customers. Without their software prowess, their giant brains, and their large testicles, Tesla wouldn't have been able to do this. But they have all those things in spades.
Now, the company recorded a $23 million charge against their Bitcoin holdings. Of course, everyone wants to know if Tesla's going to start accepting Bitcoin again. Elon has given a few hints, but certainly hasn't confirmed anything. How concerned are you about Tesla's Bitcoin position? And would you like the company to start accepting it again or not?
Yeah, Ark Invest has done a lot of work on Bitcoin. My colleague Yassine is an expert on the area. In general, Bitcoin as corporate cash, we wrote about this in our Big Ideas presentation earlier this year. If 1% of all S&P 500 companies if they devoted 1% of their cash to Bitcoin, this could actually up the price by about $40,000. And, we think that this could be a smart thing to do. If you're a company like Tesla that wants to, operate in many different markets, for instance, instead of hedging that foreign currency, you could accept Bitcoin. Now, Tesla did pause accepting payments. Elon had said that he was looking to be sure that the energy that's used for Bitcoin is clean energy, right? But actually, recently, last week, on the B word, which Kathy, our CIO, participated in. She spoke with Elon and Jack Dorsey. He actually seemed incrementally positive on Bitcoin, I have to say. And he said that they're looking to make sure that a certain percentage of mining will meet that clean energy requirement. But it sounded like he thought more likely than not they would in the future, again, begin to accept those payments in Bitcoin. So I think it's a smart move on their part. I think that the accounting treatment of Bitcoin might be reconsidered in the future, and Kathy has said that in the past, the way that it's treated right now as an asset. But in general, for transactions, it actually could be a pretty smart move.
So just quickly touching on those Bitcoin comments from Tasha, I'll put a card in the corner if you guys haven't seen the highlights from the B word. Elon Musk very explicitly, he expects that Tesla will begin accepting Bitcoin as a form of payment again as soon as Tesla can confirm with data that more than 50% of the energy involved in mining Bitcoin is coming from renewable sources and that the trend is continuing in that direction.
Tesla beating across the board, expanding production on 3 continents. What are your headline takeaways here?
Yeah, well, you all just touched on it. I think one of the big takeaways is that they said that Shanghai is a big export hub for them. I think that'll help them on margins. I also think, this is what the Chinese government wants. They've wanted to be an auto exporter for years, and Tesla is making that possible in electric vehicles, one of their, areas that they really have been focusing on over the past 5 years. So I think that's huge.
Huge is a massive understatement here. I think a lot of investors are overlooking the impact of Tesla using their Gigafactory Shanghai as an export hub. I'll give you guys a really relevant example quickly. In Australia, we import practically everything. We get completely reamed and pay way over what people in the US and China pay for vehicles and other complicated manufactured products because we have a sparse population spread out over a wide area. It makes practically zero economic sense to manufacture anything here. So we're used to getting absolutely reamed and paying way over what people in the US and other parts of the world with locally manufactured products actually pay for them. Given the fact that China has much lower labor costs and much lower parts costs due to the localized supply chain, the vehicles coming out of Shanghai are already more profitable than the vehicles made in the US. But there's another layer to this. Australians, folks in Singapore, pick your country. We're used to getting absolutely reamed and paying way above what others in the world pay for products, which means that the made in Shanghai vehicles can be exported and actually have big margins and still be great value from our perspective. In short, vehicles produced in Shanghai and exported are actually going to be even more profitable than any vehicles Tesla's producing locally in China or in the US or in the future in Europe. And now the moment most of you have been waiting for, Tesla's $12 trillion opportunity.
In my space, we also saw that the FSD beta version 9 was recently rolled out to customers. Videos look good. It's not perfect, right? Dense urban areas like San Francisco, still tough for the system. But in suburban streets, it's pretty good. And this is its vision-only system. I just put out a Medium piece. We think that the ride-hail opportunity is an $11 to $12 trillion opportunity. And Tesla's data advantage is really huge there.
And in just a moment, we'll look at this Medium article written by Tasha.
The ride-sharing opportunity, when do you see that actually starting to play out?
Yeah, well, so I think over the next, say, year or two, we could see the first implementations of a fully autonomous version of autopilot. Again, I think the beta program is sort of the early innings of that. Elon has said that by version 10 or 11, we're on 9 right now, they'll make the release to all customers to download. So I think that's sort of the next step to look for. And then maybe over the next year or so, the first implementation of full self-driving. But we think this could be extremely profitable, totally change the business model, become a recurring revenue stream. At the same time, if Tesla were to fall short of meeting that deadline, we actually think they could profitably run a ride-hail service today because they have better economics than Uber and Lyft. Their cars are cheaper per mile to drive, and I think the verticalization of the Tesla strategy could really help them in that market.
This is a fair point. Even if Tesla are much later than expected in delivering on autonomy, they have a great fallback option, which could be operating their own ride-hail service. As we know, electric vehicles cost practically nothing to own and operate. There's very few moving parts, almost zero maintenance, and the total energy costs to refuel an EV are much lower than an internal combustion engine vehicle. So the economics make sense even if Tesla isn't doing autonomous vehicles that are driving themselves. Even a traditional ride-hailing service would be an extremely profitable model if Tesla chose to go down this path. Now let's head over and read Tasha's Medium article. Quote, Ark estimates that autonomous driving could expand the ride-hail market to an $11 to $12 trillion opportunity. And this is an interesting quote here. This piece represents Ark's newest form of written content, Works in Progress. Works in Progress content is a snapshot of our internal research process. These pieces are unfinished and generally more technical than Ark's blog content. The goal of Works in Progress content is to open our thinking as it evolves such that we can gather feedback and learn quickly if we are wrong. This is really cool. This is the kind of research that previously would have stayed behind closed doors until it was a little bit more refined. Now Ark are putting this out to get feedback and actually improve this stuff. I love this concept. This is the complete opposite of the traditional Wall Street model. And who do you think is going to have the better quality research overall? The folks that remain in a walled garden, don't solicit outside feedback, don't iterate their research, don't present anything until they think it's completely finished? Or the research firm who's pushing stuff out in progress, soliciting feedback and iterating? Something to think about. Takeaways. Ark previously estimated that autonomous ride-hail could expand the ride-hailing market from $150 billion today to $6 to $7 trillion by 2030. Based on our most recent research on consumers' perceived value of time, we now estimate the total addressable opportunity to be $11 to $12 trillion. Background. Ark estimates that autonomous driving could reduce the cost of ride-hail significantly, expanding the addressable market. Today, the average price of an Uber is $2 per mile, while Didi is 50 to 70 cents per mile. We estimate that autonomous ride-hail services will have higher utilization rates than human-driven cars, as well as lower labor and insurance costs. At scale, Ark estimates that an autonomous taxi platform could price rides profitably at 25 cents per mile. As shown below, autonomous rides could be cheaper than driving a personal car and cost competitive with public transit. Looking at the price per mile here, we've got Uber today around $2 per mile, personal car ownership approximately 1/4 of the cost of Uber at 56 cents per mile, autonomous ride-hail at scale about 25 cents per mile, about 1/8 of what it costs to use Uber today, and half the cost of personal car ownership, on par with commuter rail and commuter buses. Our recent analysis. We arrived at our 25 cents per mile estimate by examining the cost to operate an autonomous ride-hail platform and assuming the operator keeps a modest profit margin. Recently, we analysed the market from the perspective of the consumer. What would the average consumer be willing to pay for a ride-hail mile? We used past studies to estimate how consumers perceive the value of their time. Ark estimates that time spent commuting could be valued on average at roughly $1.10 per mile, while time spent on personal travel could be valued at roughly 60 cents per mile. Note that these estimates only include the perceived value of time, while the full cost of driving would include an additional 56 cents per mile cost to drive a personal car, as shown below. And looking at this graphic here, all in cost of driving today. Cost of driving a personal car, shown there at 56 cents per mile, in addition, the perceived value of time. And I just want to take a moment to actually discuss this. Ark are onto something here. Now, everybody's at a different stage in their life. When I was a broke-ass student, I would happily wait 2.5 hours to get a midnight bus back from the city using my weekly travel card and pay nothing instead of paying $10, $15 for a taxi. That's how much of a tight ass I was. That's how little I valued my time at that point in my life. Today, I have completely flipped the script. I don't even cook anymore. I'm making videos 7 days a week. I don't have the time or the energy. I pay an exorbitant amount of money every single day to eat because I can't be bothered cooking because I value my time that much. If I was cooking meals, I wouldn't be producing as many videos. I could go on and give you guys a bunch of other examples as well. The point is today, I really value my time and I will spend incredible amounts of money to save my time. I would love nothing more than to be able to travel to people in a fully autonomous taxi with a driver who doesn't smell because they don't exist, a driver who doesn't talk because they don't exist, where I could create content on the go and move from place to place. The perceived value of time here is important. So what? Our estimates for the perceived value of time suggest that before autonomous ride-hail is widespread and costs decline to 25 cents per mile, it is likely that there would be substantial demand today for a higher priced service. For example, given consumers' perception of the value of time, we believe that an average robotaxi price of 60 cents to $1.10 per mile would be sufficient to address the roughly 5 trillion urban miles that people in the United States and Western Europe drive annually. And by the way, just to give you guys some more context, if I could get in an autonomous robotaxi, travel over super long distances and record videos while I was in the taxi, I would absolutely do it. I don't care how much it costs per mile. If I can free up my attention to actually do something productive, I'm all over it. Now, not everyone's going to think the same way as I do. Not everyone's at that stage in their life, but there's many people who are. I value my time more than anything. In case you guys don't know, time is a non-renewable resource. I can get more money. I cannot get more time. In China, however, there is likely more demand for a service priced at 50 cents per mile, given the inexpensive human-driven ride-hail options available today, as shown below. If you guys want to pause the video and look at this table in detail, go for your life. In short, Ark is showing here that the more expensive the cost per mile, the less total possible miles will be available, less people will be interested in. $4 per mile, about 1 billion miles of total potential demand. Down at 25 cents per mile, we're talking about somewhere on the order of 20 trillion miles worth of demand. That's trillion with a T. Ark estimates that at our 25 cents per mile pricing level, there will be an additional 20 trillion miles worth of demand. As ride-hail prices decrease and more customers enter the market, Ark estimates that global traffic miles could triple relative to today's levels. I just want to jump in here because I know there's some people that disagree with this point. It's like, why would miles go up just because it gets cheaper? Now, I can understand where you're coming from here. But let's think about this for a moment. I'll once again use myself as an example. If I'm faced with the choice of commuting anywhere to do anything, even if it's catch up with friends, I'm always doing the analysis in my mind. Is it worth my time? And to be honest, most of the time it's not. To give you guys an example from my personal life, I would much rather pay somebody's Uber cost to come to me. And I literally do this, especially with some of the women that I'm dating who are studying at university, don't have a huge income. I can't be bothered wasting the time traveling 30, 40 plus minutes for a date. I'd much rather pay for their Uber here and back just so I don't have to waste time commuting. And I literally do this. If I'm having to drive a vehicle myself and I can't free up my mind to actually do something else, I'm very unlikely to do it. If instead, I don't have to pay attention, I can be productive and I don't have to have a conversation with the driver or put up with their body odor, it changes the game completely. Imagine how many children currently commute to school on bus or train whose parents will be more comfortable if they could put them in an autonomous robo-taxi. There's definitely a case to be made that miles driven in total will massively increase when autonomous robo-taxis are ubiquitous. And it's not just about cost or convenience, there's a lot that goes into this. Let's compare, for example, taking an autonomous ride-hail taxi on your own versus being on a train. In both cases, you don't need to be paying attention, you don't need to be driving, you don't need to be ensuring that you don't kill yourself or other people on the road. But there's a key difference: privacy. It's a very different environment when you're surrounded by other people on public transport versus on your own in an autonomous robo-taxi. There's also a safety element. Anyone who's caught public transport on any city on earth on a late Friday or Saturday night will probably understand where I'm coming from here. Besides the fact that there's probably a pile of vomit nearby, there's a bunch of intoxicated people, and in fact, another example from my personal life, when I first got to Sydney probably 15 plus years ago, I remember I was riding on a train about 12:30 a.m. and had police walk through the carriage and say, "Hey sir, you shouldn't be sitting in this carriage alone, you should go up to the front carriage where there's other people, it's not safe here on your own." I'm like, are you serious? It's not, why is it not safe here? Like, there's cameras everywhere. And like, dude, I'm like, really? Okay, cool. So there's a lot going on here. There's safety, there's privacy, there's convenience, and there's the ability to free up your mind, your focus, and your attention to work on other things. So many people will be willing to pay a premium for one or more of these aspects that come along with an autonomous ride-hail taxi. With these assumptions, our estimate for the ride-hail addressable market expands to $11 to $12 trillion, as shown below. We can see here the addressable market at around $1 per mile, about $1 trillion. At 60 cents per mile, about $2.5 trillion. At 50 cents per mile, $2.75 trillion. At 25 cents per mile, $5 trillion. Ark believes the companies best poised to win share in this market will be the companies that own the autonomous technology stack or the autonomous platform operators. Without a successful autonomous platform, today's ride-hail players may be forced to partner with outside technology providers and cede a substantial portion of the fees they collect off rides in the process. Autonomous technology companies will both expand the addressable market and snag the lion's share of the economics. And I absolutely agree. Uber and Lyft are fucked. In the very best case scenario, fighting for their survival, they will have to partner with companies who have autonomous electric vehicles and lose the lion's share of the profits. There's no other way I see this playing out. You can't fight the economic realities of not having to pay a driver, the biggest cost in a ride-hailing service. So just a few closing comments. First of all, a round of applause to Ark Invest for having the kahunas to actually put out their works in progress research and solicit feedback. It takes a lot of courage, but ultimately it's going to lead to better research. Second of all, I just want to talk about the absolutely ridiculous opportunity we're talking about here. If Ark Invest are right, and hey, even if they're off by a factor of 2, 4, 5, in either case, this is a truly colossal opportunity. We all know Tesla is in the lead in terms of autonomy and ride-hailing. No one else is close. Tesla has the fleet, Tesla has the data, Tesla has the world's leading computer vision expert, Tesla has the best engineers. No one is catching them, it's just a matter of time. The question is, how big or small of a slice of the global ride-hail market will Tesla ultimately capture? Even if Tesla captures a mere 10% of the global ride-hail market, that's $1.2 trillion of additional market cap. Today, Tesla is worth about $600 billion. In other words, if Tesla can get a 10% slice of the global autonomous ride-hail market, that's a tripling in the value of Tesla's stock price from where it is today, just based on that revenue on ride-hail, not including any other aspects of their business. Let's do a little bit more math here. What if they got 20%? We're now talking about $2.4 trillion. And I'm sure you guys can do the rest of the math from here. The point is, this ride-hail opportunity is colossal. Of course, Wall Street doubts Tesla's ever going to even solve autonomy, let alone capture or be a leader in the ride-hail space. But personally, I think they're in the pole position, and I think they're on track to capture double-digit percentage of this market over the long term. I'd love to know what you guys think in the comments below. How close to solving autonomy do you guys think Tesla actually is? And over the longer term, how much of the global autonomous ride-hail market can Tesla actually capture? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.